This webinar is part of the Virtual Christian College Fair sponsored by NACAP and findyourchristiancollege.com. The virtual fair platform is open 24 hours, 7 days a week from now until November 17th, and you can explore anytime you like. And be sure to join us later today in just a few minutes when we finish this session, as college reps will be in the booths waiting to talk with you. We'll also have another live session on Thursday the 16th, and we invite you to watch your email for more information on those dates. But thanks again for being with us. We're so glad that you're here. Ed Recker is Director of High School Relationship Management with Sallie Mae. He serves high schools, states, and professional organizations throughout the United States. He joined Sallie Mae in 2019 and has over 20 years experience in the financial aid and enrollment industry at various public and private institutions. Ed has a master's of higher education from the University of Toledo. He resides in Ottawa, Ohio with his wife and daughter. And on behalf of NACAP and findyourchristiancollege.com, my name is Phil Cook, and I'm so pleased to welcome you to this webinar. And Ed, thank you for sharing with us tonight.
Thanks so much, Phil. Really appreciate it. And I've got to tell you, every time I hear over 20 years, I'm wondering how in the heck did that happen? Yet here we are. And I'm so happy to be here with you all. So thank you again to NACAP for having me, and for everyone tuned in, thank you for tuning in, because we're going to tackle a really important topic tonight, which is financial aid, understanding the process and its changes. So as we take a look at the agenda here, we do have a packed agenda. So we're going to talk about cost of college, really fact versus myth. You know, what's out there, what's real, what isn't real. We're going to talk about the different types of aid that you may be eligible for. We're also going to talk about some of the changes. So the FAFSA is changing, and is changing pretty drastically for this upcoming cycle. So we're going to talk about that updated timeline and the changes in getting started. We're going to also talk about various other important changes, changes to naming conventions and considerations. And then we're also going to talk about some free tools and resources. So as you probably noticed, a lot of change here. So let's dig right into it. So some of the uncertainties families are experiencing undoubtedly comes from not knowing exactly how much they'll need to pay. So when we start talking about the cost of college, that's really what we're talking about. So Sallie Mae does a study called How America Pays for College. And that research tells us that families pay, on average, and gang, I say this, you know, this is the universe, from your really, really expensive, ultra elite, ultra privates. I won't name any names, but think East Coast, you know, kind of Vine kind of schools, down to your community colleges. But the averages family paid a bit over $26,000 for 2020-21. But the reality of each family's college costs really depends on many factors, including the types of schools the students will attend, where the school's located, their individual financial aid package, and more. So again, How America Pays for College research tells us that families' perceptions of college costs are a critical component in their decisions about which schools to research and apply to. So more specifically, about 6 in 10 current undergrad families eliminated a school based on cost in that very first step before deciding which schools to even research. So since specific information about how much college will cost for them won't be available until the student actually applies, is accepted, and generally after they receive their financial aid offer, families often are relying on general information available online, but have perceptions and assumptions about college costs as they start navigating college financing. So from the two questions we have on this slide, it's clear that not all perceptions and assumptions are accurate. So the first bar graph on here shows the percentage of respondents who agreed, neither agreed or disagreed, agreed, or just didn't know whether the amount families actually pay for college is lower than the price that is advertised by the school. According to our research, 18% of families agree that statement. So 18% agree that what families pay for colleges is lower than the advertised cost. In reality, some data sources show that the net price, or the actual cost of attending college, for more than 60% of students is less than the sticker price. Another perception is confirmed in the data shown in the second bar graph. Here, we asked families about their agreement with the statement, private schools are always more expensive than public schools. There was a near consensus here. Nearly 7 in 10 college-bound families agreed with the statement. And the reality is that while for some, it may be more expensive to go to a private school than a public school, the actual cost really depends on the family's specific situation, and the private schools offer their ability to offer aid. And oftentimes that is much more than what you would see at a public school. So I guess the big takeaway from this slide is perceptions aren't always reality. We do come in with some preconceived notions about how much school would cost, but we would really encourage you folks to really go through the process. If you have schools that you're interested in, just follow through pretty much to the end until you get that financial aid offer. So that way you can really do an apples to apples comparison between them. So as we move on, when we talk about school decisions, we can't avoid talking about cost. And we've already started that conversation. So nearly 8 in 10 families tell us they eliminated a school from consideration based on cost at some point in the process between deciding which colleges to research and which to attend. This proportion, so about 8 in 10, has stayed consistent over the past 5 years or so. What's most interesting to me is that more than half of families, so 54%, say they eliminated schools based on cost even before deciding which colleges to research. The question I would ask to that is, what cost information are families using in this early process? Is it the sticker price, the net price? Some sources tell us that 90% of college families pay less than the sticker price for college. But of course, they don't find out again until they actually need to pay or they get that financial aid award offer. So again, we really want people to think about this as they go through the decision-making process. We see all of those scenarios played out on the screen, when folks are eliminating things. But realistically, folks don't necessarily know how much they're going to pay until really that last step after looking at the financial aid packages and then comparing them accordingly. So the last thing we're going to talk about here before we really kind of dig into the nuts and bolts is scholarships and the usage specifically of scholarships and grants. They're utilized by 76% of families to cover school costs. So 57% relied on grants, and then 61% used scholarships. We're going to talk a little bit more about this as we move forward, but in general, schools continue to be the main source of scholarship dollars. In fact, 2/3 of families that use scholarships say they receive them from the school and in an average amount of just over $8,000. So we've talked a little bit about scholarships, but I think folks often ask, where are they and how do they apply? And actually, we should probably start with that first question is, what exactly are scholarships? So a scholarship is, generally speaking, free money you don't have to pay back. I mean, it's as simple as that, gang. This is money that is a gift. It's often referred to as gift aid, and it's money that you don't have to pay back. A scholarship might be used to cover the entire cost of your tuition, or it might be a one-time award for a few $100s. Either way, it's worth applying for because it'll help you reduce the cost of your education. And wondering when you should apply for scholarships is usually also a question. Each scholarship has its own unique requirements that indicate who qualifies and how to apply. It also depends on the scholarship deadline dates. Some deadlines are as early as a year before college starts. And gang, I've actually seen scholarships that freshmen in high school are eligible for. So if you're in high school now, which I'm assuming most of you are, you should be researching and applying for scholarships really right now. Well, not right now. Finish watching this, but afterwards, take a look at some of the scholarship resources out there and keep looking. And if you missed a window, don't give up, because that scholarship information and those scholarship deadlines all often roll over year after year. So it's not necessarily a one and done thing. Continue to look, continue to apply. Speaking of applications, folks often ask, how do I apply? So again, each scholarship has its own requirements, and the scholarship website should give you an idea of who qualifies and what those deadlines are. And we just ask that you make sure you read that application carefully, fill it out completely, and meet the application deadline. All right. Now, moving on, we're going to talk a little bit about grants. And we touched on this just ever so briefly with that earlier slide about when we lumped in scholarships and grants. So oftentimes people ask, what are grants? So grants really are, they are considered similar to scholarships. They're gift aid. This is free money that students can use for tuition, fees, room, board, and books, depending on the requirements. Grants are offered by numerous sources, usually coming from the federal and state government, but also from colleges and universities and other independent or nonprofit organizations. So we've listed the federal Pell Grant and the federal Supplemental Educational Opportunity Grant, sometimes referred to as FSEOG or SEOG. Gang, you will learn that financial aid folks love our acronyms, so just keep your eyes and ears open for those. But again, FSEOG or SEOG, and these are the major federal grant programs. Right. As we continue to move forward, we do want to talk a little bit about student loans. And I know folks tend to not like to hear that word. I always, okay, again, preface, the only financial aid humor is bad humor. So my joke is that loan is a four-letter word, but it doesn't necessarily have to be. So overall, 41% of families borrowed to pay for the last academic year. So 41% of families did leverage student loans to help pay for their education. So when we look at the study that we pulled this from, this proportion is exactly the same as the prior year. So borrowing levels vary by school type to offset the difference in pricing. So for example, 45% of families where a student attends a four-year private school said they borrowed, and 41% of a four-year public said they borrowed. So again, a little bit different there, but you know, not terribly different there. But as you can see from the slide, it does show those proportions as to based on the type of school, who borrowed, and so forth. Oftentimes folks will then ask, all right, Ed, so what types of, if I need to use student loans, what types are out there? So the main student loan, and I stress student loan, are displayed on the screen there. So for undergraduate students, those types are federal direct subsidized and federal direct unsubsidized loans. Those loans are given out on an annual basis. And the loan amounts are determined based on the year that the student is in school. So as you can see, $5,500 for first year or freshman students, $6,500 for second year, $7,500 for the third and final years. And then they do cap for an undergraduate degree, the maximum amount of $31,000 for that year. You know, there's a lot of other information on the screen, but oftentimes folks want to know what the interest rate is. We do have those listed, as well as folks want to know, is that fixed or variable? And those are fixed interest rates. So that's something that once you get it, it's locked in. You don't have to worry about a rising rate environment or things of that nature. So those are the primary student loans that we're looking for, that students will be looking at.
Ed, I had a question come in. May I ask it real quickly? In terms
Absolutely.
of the maximum, the question is that 31,000 aggregate, that's for all 4 years? Is that what the aggregate maximum is? Are we understanding that correctly?
That is correct, Phil. So that is the aggregate maximum for all 4 years, or for really a bachelor's degree, undergraduate degree. Now, keep in mind, we are just talking about federal student loans here. So there are other loan programs. Because of time constraints, we're not going to get into them in depth tonight. But there are other programs that if you were looking at a way to fill a gap beyond that, There are loan programs out there such as the Parent Plus, Federal Parent Plus loan. So that's a loan for parents that a parent can take out to help fill that gap. Or there are private educational loans where the student is the primary borrower and the parent, or really any third party, could be a co-signer, a co-borrower, to help fill any remaining gaps. So that's where a lot of times folks they see that aggregate number, those annual numbers, and they're like, oh my goodness, if I'm gonna owe more than that, how am I going to cover this? We always really preach free money first. So look as much as you can for scholarships and grants, but know there are other programs out there other than these. All right, so we've covered some of the main programs. I want to get into some of the nitty gritty about the FAFSA. So first and foremost, the FAFSA is the free application for federal student aid. Again, there's another one of those acronyms. And this is required for all federal aid. And for the most part, it is that trigger, if you will, for state aid and a lot of institutional aid as well. So if you're looking to getting scholarships and grants from colleges and universities, they're often looking for this as well. So we always encourage folks, submit the FAFSA as soon as possible. And we're going to hit on that very first big change. So historically, the FAFSA has opened on October 1st. This year, that open date has been delayed. And as of today, as of right now, and we actually spoke about it before we jumped on this call, when is that open date? And the honest answer is, gang, we just don't know yet. It's in the legislation that it must be opened no later than December 31st, but there have been significant changes to the FAFSA, and that's a big reason for the delay. So we don't know. The Department of Ed may know, but they're not necessarily publishing it yet. Gang, we just always encourage folks to first and foremost show a little patience, show a little grace with especially the financial aid office, but even extend that to the Department of Education. The best analogy that I was given when I went to some federal training was, in our house, we watch a lot of HGTV, so home renovations, and the federal trainer said, look, the FAFSA has been torn down to the studs. Like, it is down. They had to tear it down to its framework, and they're building it back up. So that's a big reason why the delay, and why it's going to take a little bit. With that being said, once it opens in December, we encourage you to get out there and fill it out as quickly or as soon as possible, because there are some aid programs that are first come, first served. And then we also want to remind folks that, hey, you know what? You have to fill out the FAFSA every year. So keep that in mind. And remember, this is a one-time only deal that it's opening in December. So next year, October 1st rolls around, you should be able to fill out that FAFSA right then and there. All right, so again, moving on to some more changes for the FAFSA, and really some important things that you're going to need to know just to get started. So the first thing that you're going to need to get started is called a Federal Student Aid, or FSA ID. And both the student and the parent, or potentially both parents, will need an FSA ID. This does act as an electronic signature for federal student aid documents, including the FAFSA, and it can be obtained at studentaid.gov. And we've got the things that you'll need to get that FSA ID listed. But the big change with the FSA ID, because this in and of itself is not a change. You have needed an FSA ID in the past, you're going to need it in the future. But the big change is that the FSA ID must be obtained before starting the FAFSA. In the past, it could be done concurrent with completing the FAFSA. Now the Department of Ed is saying, hold on, you need to get it ahead of time. That process usually takes about 3 to 5 business days, and that process is up and running. So folks, I would encourage you to, if you haven't done so already, go out and get it right now. Now, the other question we usually get is, if you're a parent and you say, well, I have an FSA ID from an older child, or potentially if you're like me, I had one as an administrator, or some folks had it for graduate or professional school. That is still the case. You will have to go in and just basically reestablish it. So you don't get a brand new one. You just have to kind of resurrect it, if you will. But you're good to go there. So keep that in mind for FSA IDs. Once you have one, it sticks with you essentially for life. So the other piece with the FSA ID is multi-factor authentication, or what the Department of Ed is calling two-step verification. So for folks who use like banking apps or maybe even investing apps, other types of apps, this is already in play. And what multi-factor authentication is when you log in, you've got a username and a password, but you get sent a text message and you need that 6-digit code or that 8-digit code to log in. That's what they're doing. It's another layer of security. So this, again, in and of itself, isn't necessarily new. It actually started last year. But what is new is that now you will have to set that up along with your FSA ID. Once you fill out your application for FSA ID, it's going to ask you how you want to receive that: text, email, or via an authentication app. The other piece that is a bit of a change here is that the Department of Ed will issue you a one-time backup code. And gang, I can't stress that enough. It is a backup code. So you won't need this unless for some reason you forget to update your profile on your FSA ID, your studentaid.gov account. So you go to log in and, oh my gosh, I switched phone numbers. Oh my gosh, I used an email address that's no longer enabled. What do? You have that backup code to be able to log in. They only issue that once. And based on what the Department of Ed is telling us, you cannot retrieve it either. So once you get that backup code, make sure you screenshot it, take a picture of it, write it down, print it off, do whatever you need to do, get it, keep it safe, keep it secure. So if in the case that you do need it, you've got it and you can use that. All right, we continue to move along. And gang, there's a lot of information on this slide about what the student and parent need. I'm not going to read through it all. But what I am going to tell you is there are some things that are no longer on there. And that is your tax forms and your W-2 forms. And some of you all might be thinking, wait, this is really strange, Ed. Like these are kind of the mainstays of the FAFSA. We need that financial information. Well, part of the change with the FAFSA is that they now have a direct conduit with the IRS, and it's called the Future Act Direct Data Exchange, or FADDX. This allows for the Department of Education to pull your information, financial information, directly over from the IRS. Now, you as the user have to provide consent in order for that to happen. But in doing so, gang, this is how the FAFSA, and I'm bearing the lead a little bit here. The FAFSA is going to be a whole lot shorter and hopefully a whole lot easier for the vast majority of people. In providing consent, that is going to essentially cut the number of questions that you'll have to complete with the FAFSA in half. In the past, it was anywhere from 100 to 120 questions, depending on the user. Now, moving forward, it's going to be about 40 to 50 questions. It is very important that you provide consent. The Department of Ed, although they are not necessarily requiring it, they are strongly encouraging it. The reason being is once that information comes over from the Department of Ed, it is considered authentic, and there's basically it's above reproach. If you do not provide consent, it will allow you to key in your financial information. But gang, what's going to happen is an index number will not be calculated. This is really important because if an index number isn't calculated, you aren't eligible for federal aid. So it's one of those that people kind of, scratch their heads a little bit and tilt it a little bit and say, well, Ed, is that really a choice then? I'm like, well, I mean, technically, yes, but the reason being is they really want folks to provide consent because it's going to make the process a whole lot easier for everyone involved: student, family, financial aid office, and so forth. The other very quick update on this slide that I do want to point out is if you're really looking around for various schools, you can list up to 20 schools on the FAFSA again. So I say again because if you're a grizzled veteran like myself, you can remember that 12, 15 years ago, it actually was 20. Then they switched it to 10. Now what's old is new again, and we're back up to 20. All right, continuing to move on. So another change is what is being called user-defined roles. So what you're seeing is actually the welcome screen when someone logs onto the FAFSA. And you'll notice the very first thing that it says is, are you the student? Are you the parent? The reason they do that, and it sounds so simple, but it's so, so important, is historically, people would get those roles confused. The FAFSA would ask the question in first person. What is your name? What is your social security number? What is your date of birth? Those types of things. So if the parent started the FAFSA, they would accidentally key in their information as though they were the student, because it was, they were kind of doing it on behalf of the student. So with this, as silly as it sounds, as simple as it sounds, it's going to make a huge difference. And this is another reason why the FSA ID is required ahead of time. This is another reason why they're asking for that FADDX, because again, it's going to allow and better allow that role to be defined. It's going to make sure that the information is going in the right place to the right person and so forth. So a lot of really good things here that are going to help streamline that process. And again, we've already talked about the FADDX providing consent and how important that is to make sure that you do get that index number and that gets calculated. So what happens after the FAFSA is submitted? So the students will receive a FAFSA submission summary. So this is a little bit of a change. This is one of those naming convention changes we had mentioned. So in the past, this was the student aid report, or the SAR, and you will receive the FAFSA submission summary usually within a couple of days of completing the FAFSA. This is going to give you your basic information about your federal aid eligibility. And essentially, think of it as a transcript of your FAFSA. It's going to give you all that information. Now, one thing that it's not going to include is any financial information. So this has been somewhat of a point of contention for some FAFSA filers in the past. Specifically parents who didn't necessarily want the student to know their financial situation. So a benefit of the FADDX is because that information is coming straight over from the IRS, it's coming in behind the scenes and it's never actually displayed on the FAFSA. So the student doesn't see it, the parent doesn't see it, they don't see it throughout the entire process. Now, the financial aid office will still see it on the back end. They will receive that information in the case that they need that to assist in aid eligibility determination. But the reality of it is for most people, this is going to be a really big positive. It eliminates that whole question and uncertainty about who's going to see my information. So keep that in mind. If you don't see it on there, that's the way it's supposed to be. So again, colleges will get that FAFSA information, and colleges may request additional documentation through a process called verification. But we are anticipating that that process is going to be greatly diminished, largely because of that FADDX. Again, a huge benefit of having that information coming over already validated and verified. And then again, colleges will use this data to send out financial aid offers. Now, last thing on this slide, gang, I do want folks to kind of level set expectations. You will receive that notification from the Department of Ed saying that your FAFSA has been processed. This does not mean that the school itself has processed your aid and you should have an award package immediately. All this means is that the Department of Ed has processed it and they've sent it off to your school. So that the time that happens until the time the school actually receives it can be anywhere from 3 to 5 business days. And then it still has to line up with where the school's at with their process in terms of issuing a financial aid offer. All right, so we're nearing the end here, and I did want to go through a couple more naming convention changes. So we talked about that index number. Historically, that's been called the expected family contribution, or the EFC. This is being replaced by the student aid index number, or SAI. So people often ask, why did they change this? Well, there was a lot of confusion around the expected family contribution. Is this what I'm supposed to pay? Do I owe this? Is this what I pay no matter what school I go to? It was really confusing based on the name. But at its core, it was really just meant to be an index number to help colleges and universities determine what types of aid and how much of that aid to extend to students and families. The goal is, by changing that name to Student Aid Index, that it's really going to clear up a lot of that confusion and just get it back to its core, what it was meant to be, that index number to help determine what types and how much aid a student can receive. Another change is the SAI can now be reflected as a negative number as low as 1,500. And gang, you will see your SAI number once you complete the FAFSA. So again, a couple of questions that usually come with this. Hey, does this mean I'm eligible for more money? Not necessarily. So it doesn't automatically qualify you for additional federal aid. What it's meant to do is allow colleges and universities to really see and help identify students with the highest financial need. So at that point, the hope or the goal is that hopefully some of those schools will step up and extend additional either institutional money, or there are some discretionary federal funds, extend a little bit more of that aid to those students with that higher need. Students can now qualify for federal Pell Grant in multiple ways. Again, this in and of itself isn't necessarily a big change. Students have always been able to do this. It's just the way they're calculating it now. And gang, I am not going to bore you to death into that calculation. Just know that behind the scenes, it's still happening, and it does impact that. So another change, family size. So it used to be called household size. So now it's family size, will be based on the number of people claimed as exemptions on the tax forms filed. Now, I'd mentioned that all of that information is coming over from the IRS, and this is true. But in this case, the student can update that information on the FAFSA. So if it's a case where it's a split family and one parent claims the child one year, another the other year, and you're thinking, oh my gosh, this is going to mess everything up, have no fear. You can input that into the FAFSA and make sure that it's accurate.
And I'm sorry, I got a question come in.
Yeah,
looks like it's
absolutely.
From a family member that's had others in college before, but basically the question is, do you expect that more families might be eligible for the Pell Grant based on the new FAFSA?
Yeah, so that's a great question, Phil. And so Sallie Mae hasn't done any research on that. However, with that being said, there are other organizations that have done research, and I hate to use this analogy, but there will be some winners, there will be some losers, and we're going to talk about that in just a little bit. But the good news is that they are anticipating many more winners than losers. So when we talk about it, they are projecting an additional 220,000 approximately filers that will be eligible for federal Pell Grant. Compared to they're anticipating about 50,000 that may lose eligibility. So when we start talking about net gains, we're talking about approximately 170,000 additional families that could receive federal Pell Grant, which is another reason why we always encourage everyone to fill out the FAFSA, regardless of if you've done it before, because so much has changed. Your eligibility may change as well. So we're going to wrap it up here. Just a couple more things. Parent information on the FAFSA will now be from the parent which provided the greater portion of the student's financial support. Historically, this has been it's the parent who is the custodial parent. So on its surface, again, it sounds like this might be a big change. I'm of the camp that it's not going to be that big of a change, because oftentimes the student in which the parent that is the custodial parent is providing the most financial support via in-kind support. So this is where the Department of Ed is very clear, and they're saying, gang, make sure when you make this calculation, students and families, that you're thinking about things like housing, meals, transportation, things that someone's not necessarily writing a direct check for, But those are things that absolutely cost money, and you need to take that into consideration when you're thinking through these. And then the last one, and again, this is where when we talked about federal Pell Grant eligibility, and unfortunately, some winners, some losers, the number in college has been removed from the federal formula. So this one is really, honestly, gang, it's a bit confusing because the question is still on the FAFSA, but it is no longer part of the federal formula. People have often asked, why did they do this? So the reasoning that we have heard from several professional organizations and the Department of Ed is they want families in similar situations to have basically a similar look. So their take is it's about spacing. If we have a household of four with two kids, the family that has one who's a freshman in college and a freshman in high school should be given the same look as a family with a senior in college and a freshman in college. So that's their rationale. I know that people feel very strongly about it one way or another. I'm just here to kind of deliver that message. So, Phil, I appreciate your smile there, because people often they don't like that part of it. So a couple quick things before we move on to additional questions. So we want to talk about resources. We talk about scholarships. One of the resources out there is Sallie by Sallie. So this is the top app for scholarships on the Apple and Google Play Store. So it is free. It helps students find scholarships, and it helps them find it on their phone. So folks, I would encourage you to check it out, download it. The other thing is, and gang, this is brand new and we're really proud of it. And again, it's free. Sallie Mae has developed what we're calling our FAFSA guide. So even though the FAFSA isn't open, the questions are out there. And we've developed, again, a free guide that walks you through it question by question and tells you why they're asking it, if you can skip it, and not necessarily how to answer it, but to walk you down that path. What's your situation, how you may approach it in your own personal situation. So again, check that out if you'd like. It's free. We're really proud of it. And it should help. It should help, if nothing else, give you a sneak preview as to what's to come. So Phil, that's all I have. I know we went a little over time, so I do apologize for that, but I'm happy to take any questions we may have.
No need to apologize. We appreciate you doing that. And thank you for putting that information up about the guide that Sallie Mae is bringing to it. Did have one more question about the, let me just get it right now. I want to read it real quickly as we finish. There was just one. And the question is, if regarding the Future Act direct data exchange, if I haven't completed my taxes, must I provide the consent for that part of the FAFSA process?
Mm-hmm. That is a great question, Phil. So I think I'm going to answer it a couple of different ways. So there is such a thing as an eligible non-tax filer. So if this is a situation where someone truly didn't have to file taxes, they earned money, but they didn't have to file, the Department of Ed is still asking, yes, you need to provide that consent. Now, and because they still need to know that income information. Now, with that being said, folks, I don't want you to panic, because when we start talking about specifically for students, there's a thing called an income protection allowance, and we're digging deep here, gang. We are in the federal formula here, but essentially what that says is, if I'm a student, I can earn up to, it's approximately $9,000, and before a penny of it is counted, quote, against me in the FAFSA formula. So from a student perspective, I mean, I guess everybody's perspective, yes, you have to provide that consent, but I don't want people to freak out and say, oh my gosh, I didn't file taxes. This is gonna ding me, or the IRS is gonna be knocking on my door. That's not the case. Don't panic. We strongly encourage everyone to provide that consent.
Excellent. Good. Well, Ed, thank you very much. We want to hear the information there to contact Ed, who's doing this as a service to families and to institutions around the country. So we invite those of you that have been a part of this today, in just a moment, to head over to the virtual fair platform. The booths are set up now, and you'll be able to interact with our college reps. But we want to thank Ed Recker for the third time Ed has done this for us. Ed, we appreciate your expertise and your kindness to do this with us tonight. Thank you so much.
My pleasure, Phil. Thank you so much.
Okay, we invite everyone else that's watching, those of you with us live, to head over to the virtual session now. Those watching on recorded, you can find more information at findyourchristiancollege.com or by emailing us on the address above.